What if the most powerful fund manager of the next decade never sleeps, never panics, and executes thousands of trades per second across a dozen blockchains simultaneously? What if your loan application was approved in seconds by an AI that verified your on-chain history, set your interest rate in real time, and released the funds automatically through a smart contract? What if an AI agent bought your groceries, paid your rent, negotiated your insurance, and managed your investment portfolio entirely on its own? All of this is no longer a thought experiment. In 2026, the convergence of artificial intelligence and cryptocurrency is one of the fastest-moving and most consequential technological shifts in modern finance. The AI crypto market reached a combined market capitalization of approximately $20.94 billion as of May 2026, with Bittensor TAO alone leading at approximately $3.2 billion. Stablecoins now process over $27 trillion in annual transactions, serving as the payment backbone of this new AI-powered financial system. The agentic economy, where AI agents transact autonomously on blockchain networks, is projected to reach $30 trillion by 2030, and 40 cents of every venture capital dollar invested in crypto companies during 2025 went to firms simultaneously building artificial intelligence products, up from just 18 cents 1 year prior. In this video I am going to explain exactly how AI and crypto are converging, why this combination is so powerful, the 6 biggest applications transforming finance right now, the top tokens and platforms leading the sector, and what this means for you as an investor in 2026. Let's get into it. Before we get into the specific applications, let me explain why AI and crypto are such a perfect combination, because understanding the synergy is the key to understanding why this convergence is so significant. The core problem with traditional AI systems is that they are black boxes. When a major AI company makes a decision, whether it is approving a loan, pricing insurance, executing a trade, or recommending an investment, you have absolutely no way to verify how or why that decision was made. The algorithm is proprietary, the data it used is hidden, the incentives of the company running it are opaque. You simply have to trust that it is working correctly and in your interest. Blockchain solves this transparency problem completely. When AI systems operate on a blockchain, every decision, every transaction, and every parameter is recorded permanently and verifiably. Anyone can audit the logic, anyone can verify the outcomes. This is why leading research from Forbes, Citrini Research, and the World Economic Forum all point to blockchain as the natural infrastructure layer for AI systems in finance. Conversely, AI solves some of crypto's biggest challenges. Modern multi-chain ecosystems are extraordinarily complex, managing risk across dozens of protocols, optimizing liquidity across multiple chains, detecting fraud in real time, and making investment decisions across thousands of assets simultaneously is beyond human cognitive capacity. AI handles all of this naturally. AI-driven DeFi uses machine learning and autonomous agents to optimize liquidity, execute trades, and manage portfolios without human intervention, creating more efficient and adaptive market operations. The combination is powerful because each technology fixes the other's biggest weakness. AI needs blockchain's transparency and decentralization. Blockchain needs AI's cognitive processing power. Together they are building what experts are calling the decentralized AI stack. Now let me explain the first and most exciting application of AI plus crypto, which is AI agents transacting autonomously on blockchain networks. An AI agent is a software program that can take actions in the world on behalf of a user, perceive information, make decisions, and execute tasks without human intervention for each step. In 2026, AI agents are no longer just browsing the web or writing emails, they are transacting with real money on blockchain networks. Here is why blockchain is the perfect environment for AI agents. Traditional financial systems are built for humans. They have logins, passwords, customer service queues, business hours, and manual verification steps. AI agents cannot navigate these systems easily. Blockchain networks have none of these barriers. Any entity with a cryptographic wallet can transact at any time with no friction. This is why Coinbase's 2026 Crypto Market Outlook specifically identifies AI agents as one of the defining themes of the year. Coinbase has developed what they call the X402 protocol, which enables high-frequency microtransaction settlement and supports agents that can launch, govern, and secure on-chain services. An AI agent using X402 can pay for a single API call, a piece of compute power, a data query, or a content license with a micropayment in stablecoins, automatically and instantaneously. A16Z Crypto has flagged emerging KYA standards, which stands for Know Your Agent. These are cryptographic agent identification systems that would allow on-chain participants to verify they are dealing with a legitimate AI agent rather than a human or a malicious bot. Near Protocol's roadmap specifically targets 1 million transactions per second for AI-native applications. The ASI Alliance, whose unified token is FET, launched its mainnet in late 2026 with the explicit goal of making autonomous AI agents the primary users of financial infrastructure. This is not a distant future concept, the infrastructure is being built right now. The second major application is AI-powered DeFi, and this is where the practical financial benefits for ordinary users become most visible. Traditional DeFi requires users to make complex manual decisions about which liquidity pools to use, when to rebalance their positions, how to manage risk, and how to optimize their yield across dozens of protocols. Most ordinary investors lack the time, knowledge, or computational ability to do this effectively. AI-powered DeFi changes this completely. AI systems continuously monitor dozens of DeFi protocols in real time. They automatically move liquidity to the highest yielding opportunities. They rebalance risk exposure based on market conditions. They detect suspicious patterns that might indicate an impending exploit, and they execute all of these optimizations through smart contracts automatically. Bittensor, which is the largest AI crypto project by market cap at approximately $3.2 billion as of May 2026, is building exactly this kind of system. Bittensor's decentralized machine learning network rewards AI models based on their performance, creating a continuously improving open AI that no single company controls. In Q1 2026, Bittensor recorded $43 million in economic activity and doubled its subnet capacity from 128 to 256 subnets to handle growing demand. The Artificial Superintelligence Alliance, whose token is FET, brings together Fetch.ai, SingularityNet, and Ocean Protocol into a unified platform for autonomous AI agents, AI services, and secure data sharing. FET is trading at approximately 0.71 cents with a market cap of $1.85 billion as of 2026. The alliance launched ASI 1 Mini, which is described as the world's first Web3-based large language model designed specifically for autonomous and agentic workflows in DeFi and multi-chain ecosystems. The third major application is AI-enhanced security and fraud detection, and this is one of the most immediately impactful uses of AI in the crypto space in 2026. The crypto industry has historically suffered enormous losses from hacks, exploits, and fraud. In 2025, DeFi security losses fell to $68.3 million as AI-driven reconnaissance and social engineering defense tools were deployed across major protocols. AI security systems monitor on-chain activity in real time and can detect anomalous patterns that precede exploits. For example, before the Ronin network hack in 2022, there were on-chain signals that a sophisticated security AI system could have potentially detected. In 2026, leading protocols are deploying AI systems that watch for unusual transaction patterns, unexpected large withdrawals, abnormal smart contract interactions, and sudden liquidity movements that might indicate an imminent attack. Beyond protocol-level security, AI is also being deployed for user-level protection. AI systems can analyze a user's transaction history and flag unusual activity that might indicate their wallet has been compromised. They can detect social engineering attempts by analyzing communication patterns. They can identify phishing websites before users interact with them. The fourth major application is AI-driven risk assessment and credit scoring using on-chain data. Traditional credit scoring uses a very limited set of financial data, mostly bank account history, loan repayments, and credit card usage. On-chain credit scoring opens an entirely new dimension. An AI system can analyze thousands of on-chain data points: your transaction history, your DeFi positions, your wallet age, your liquidity provision history, your governance participation record, to build a far more comprehensive and accurate picture of your creditworthiness. This creates the possibility of financial inclusion for billions of people who lack traditional credit histories but have rich on-chain financial histories. The fifth major application is AI in stablecoins and payments, and this is where the scale of the opportunity becomes truly staggering. Stablecoins have already become the backbone of the emerging AI-powered financial system. Stablecoins now process over $27 trillion in annual transactions, making them one of the largest payment networks on Earth. The Genius Act passed in 2025 established the first federal regulatory framework for stablecoins in the United States, providing the legal clarity that institutional adoption of stablecoin payments has been waiting for. AI is amplifying the potential of stablecoins in three specific ways. First, AI-driven smart contracts can execute self-adjusting transactions based on real-time market conditions. An AI-powered treasury management system for a corporation can automatically optimize currency hedging, timing of cross-border payments, and interest rate exposure using stablecoin liquidity pools. Second, AI enables dynamic risk assessment and instant payouts in microinsurance and supply chain finance. A farmer in Africa can receive a crop insurance payout automatically through a stablecoin the moment an AI system analyzing satellite weather data confirms a drought event in their field. Third, AI agents use stablecoins as their native currency for transacting. When an AI agent needs to pay for compute power, purchase data, or compensate another AI service provider, it uses stablecoins denominated in dollars through protocols like X402. The entire transaction happens in milliseconds with no human involvement. Coinbase X402 expansion into subscription-based agent commerce is identified as one of the next major catalysts for this entire sector. The sixth and perhaps most transformative application is the decentralized AI stack, which is the infrastructure layer combining decentralized compute, decentralized data markets, and decentralized AI model training into a single open ecosystem. Let me explain each layer. The base layer is decentralized compute. Training and running large AI models requires enormous amounts of GPU computing power. Right now this is almost entirely controlled by three companies: Amazon, Microsoft, and Google. This creates dangerous centralization. If these companies restrict access, raise prices, or impose content restrictions, they can effectively control what AI can and cannot do. Decentralized compute networks challenge this by recruiting thousands of ordinary people with powerful GPUs to contribute their computing power to an open network. Render Network has solidified its position as what analysts are calling the NVIDIA of the blockchain. Originally a rendering tool for artists, Render now powers massive AI inference tasks, and its migration to Solana provides the high throughput needed for real-time AI processing. When demand for AI inference exceeds token emissions, Render becomes a deflationary asset, creating a direct link between AI adoption and token value. The middle layer is decentralized data. AI models need massive amounts of data to train on. Ocean Protocol, part of the ASI Alliance, has built a decentralized data marketplace where data providers can sell access to their data while maintaining privacy and control. The top layer is decentralized AI model training and inference. Bittensor is the leading example. Rather than training AI models in closed corporate servers, Bittensor recruits the best AI models from developers worldwide and rewards them in TAO tokens based on their actual performance. This creates an open marketplace for intelligence where the best models win regardless of which company built them. As of May 2026, the AI-focused crypto tokens reached a combined market cap of $20.94 billion, representing the scale of institutional investment flowing into this infrastructure. Now let me give you the practical investor perspective, because understanding which tokens represent genuine infrastructure versus pure speculation is the critical skill for navigating this sector in 2026. The AI crypto sector has generated enormous excitement, but it has also seen projects launch with AI branding and no substance. Grayscale Research noted in Q1 2026 that AI-linked tokens outperformed as attention on artificial intelligence accelerated and the need for on-chain financial rails for agents became clearer, but they also noted the importance of distinguishing genuine infrastructure from narrative-driven speculation. Here is the framework professionals use to evaluate AI crypto projects in 2026. First, check for real on-chain revenue. Bittensor recorded $43 million in Q1 2026 economic activity. Render Network has generated tens of millions in cumulative protocol revenue from real customers. These are genuine revenue signals. Second, look for institutional backing. Bittensor is backed by Polychain Capital with over $200 million invested. Pending spot TAO ETF filings from Grayscale and Bitwise indicate institutional conviction. Third, evaluate the token economics. Render uses a burn-mint equilibrium where high AI demand creates deflationary pressure on the token. TAO has a hard cap of 21 million tokens, just like Bitcoin. These are genuine scarcity mechanisms, not inflationary emission schedules. Fourth, assess the competitive advantage. What does this AI crypto project do that a centralized company cannot? Bittensor cannot be censored or shut down by any single entity. That is a genuinely unique advantage. Fifth, consider regulatory risk. The US currently has no comprehensive federal framework governing AI agents transacting on blockchain networks. This is both a risk and an opportunity. First movers who establish strong products before comprehensive regulation arrives often benefit most from eventual regulatory clarity. So let's bring this all together with everything you need to know about AI plus crypto in 2026. The convergence of artificial intelligence and cryptocurrency is one of the fastest technological shifts in modern finance, outpacing the DeFi boom of 2020 and the NFT explosion of 2021. The AI crypto market reached a combined market cap of $20.94 billion as of May 2026, with Bittensor TAO leading at approximately $3.2 billion. Stablecoins process over $27 trillion in annual transactions, serving as the native currency of the emerging AI economy. The Agentic economy is projected to reach $30 trillion by 2030. 40 cents of every venture capital dollar in crypto during 2025 went to AI-focused firms. The 6 major applications are AI agents transacting autonomously via Coinbase X402 and the ASI Alliance, AI-powered DeFi through Bittensor and ASI Alliance FET, AI security systems that reduced DeFi losses to $68.3 million in 2025, AI-driven on-chain credit scoring, AI-amplified stablecoin payments processing $27 trillion annually, and the decentralized AI stack with Render Network, Bittensor and Ocean Protocol providing compute, data and intelligence layers. The leading tokens are Bittensor TAO at approximately $3.2 billion market cap, ASI Alliance FET at $1.85 billion market cap, Render Network Render leading decentralized compute, and Near Protocol targeting 1 million transactions per second for AI native applications. For investors, the key is distinguishing genuine AI infrastructure from speculation by checking real on-chain revenue, institutional backing, genuine token economics, competitive advantages that centralized companies cannot replicate, and regulatory positioning. The future of finance is being built at the intersection of artificial intelligence and blockchain. And in 2026 that future has already started arriving. If this video helped you, please hit the like button and subscribe to the Crypto Skill for more education like this. Drop a comment below and tell me, which AI crypto application do you think will have the biggest impact on finance?